ARM chips are known for using less power than those made with rival x86, the older, traditional PC and server architecture used by CPU giants Intel and Advanced Micro Devices. Now there's a surge in adoption of ARM. It's the basis for Apple's M series of processors, which have replaced Intel chips in Macs, for Amazon Web Services custom server chips, for Qualcomm's flagship Snapdragon chips that are poised to break into the PC market. And now NVDA and AMD are reportedly working on ARM-based PC chips too. But in recent years, ARM has also faced plenty of risks. About 20% of its revenue comes from China. Smartphones, which almost all contain ARM processors, are seeing a major sales slump. And when NVIDIA tried to buy ARM for $40 billion, the deal was blocked by regulators.
Coming up on today's show, ARM Holdings rips higher again. The company that's partnered with NVIDIA, sending their shares up 1,500% today. Is this the dot-com bubble 2.0? Inflation data on deck. China's risk to the Magnificent Seven. Bitcoin rallies above 50,000. The story of a guy's girlfriend who accidentally threw away over 200 million worth of his Bitcoin. And I launched my first ever online course today. Welcome back to the Click Capital Daily Market Show, everybody. I'm your host, Jared. I hope you're all doing well out there on what they call this Super Sick Monday. That's the first workday back after Super Bowl Sunday. We saw the Kansas City Chiefs win the Super Bowl back-to-back, second year in the row against the 49ers in overtime. That's the third time they've won in the last 5 years. And apparently over 16 million Americans took today off work to recover. And just getting into the market, what's also feeling a little under the weather today is tech stocks, reversing the trend of late and pulling back a bit today. As we can see here in the heat map, also got Tesla down a little bit. There was quite the rotation in the market today, and a few other interesting things going on in the market today and this week. We got CPI tomorrow, inflation data. This week's OPEX, third Friday of the month, options expiring. There's the S&P 500, pretty much flat today, just closing down a touch. There's those Super 6 stocks, actually down 0.4% as a group. And it was actually the Russell 2000, and this big divergence today. Bit of a rotation into small cap value. That was up 1.8% today. Option dealers think it could get a little spicy tomorrow. Got the VIX up almost 8% today, just under 14. Also got a very nice technical rip in Bitcoin here, getting above $50,000 a coin for the first time since late 2021. Just looking at the weekly chart here. This is a zone we've been watching to see if it can take out. Looks like it's taken it out above that big psychological level. And the new Bitcoin ETF holders must be happy. Looking at the largest from BlackRock, the iShares, which has already almost got 4 billion assets under management, ripping up 5.5% today on its second biggest day of trading since it first came onto the market about a month ago. Still haven't taken out those highs from the first morning of trading yet. And just looking at some of the Bitcoin proxies in the market, MicroStrategy had another huge day, up 11% on massive volume. And just zooming out to the weekly chart, pretty much looks like Bitcoin as well, now approaching those late 2021 levels. Same deal with other crypto related stocks like Marathon Digital Holdings, another big day. Riot Platforms as well, ripping up. Just gone absolutely parabolic on ARM Holdings today. 110 million shares traded, finishing up about 30%. And currently the market cap on this is about 140 billion or so, which, believe it or not, is approaching that of Intel, which has been in the chip business since the 1960s. And not wanting to be left out, Super Microcomputer, once again, ripping higher today, actually getting above $800 a share, and the momentum is just well and alive in this market. And just looking at the biggest rip in the market today, that came from a small little company called Beamer Imaging. At one point today, up over 1,500%. And just yesterday, we were looking at a market cap of 27 million. It's a tiny company out of Israel with only 25 employees. But they just announced a partnership with NVIDIA. And so this company works on a new video format, and NVIDIA are going to help them push out that new format, as currently most videos are based on a 20-year-old format. And so these guys just hit the lotto. And it looks like some traders did as well. We were already ripping up pre-market when the news came out. Beautiful technical moves. Bull flag, another little bull flag before it got exhausted, right up at $35 a share. Previous day's close was $2.10, and then it rolled over. Still finishing the day up 371%, and just shows that animal spirits are well and alive in this market. But the question is, for how long? Are we more closer to the top than the bottom, at least in the short term? Just looking at the weekly chart of Super Microcomputer and ARM Holdings, just these huge parabolic moves. So just looking at the skew index across the market, basically what that represents is the price of out-of-the-money put options versus at-the-money options. So at 156, out-of-the-money puts, deep out-of-the-money puts, so you can think of tail risk insurance. The implied volatility IV is about 56% higher than at the money. And just going out to a monthly chart, that is a little elevated looking back in history. And just zooming out there, looking over the last 10 years, we've averaged somewhere around 130. So typically and normally out-of-the-money puts, about 30% or so more expensive to buy in IV terms versus at the money puts. And so we've got OPEX this Friday, the third Friday of every month. We get the regular monthly options expiry, and that can get the juices flowing, sometimes a bit of volatility going into that weekend. And just looking at Tesla options for this Friday here, you can see as I hover over implied volatility here on puts at the money is about 50%, and they increase all the way down to the 1 delta to about 70%. So a pretty healthy skew there in the put options. And you could kind of think of deltas as the option market's probability of the Tesla stock price reaching that strike before expiry. So for example here, on the 19 delta put at 180 strike, that's the market saying it's about a 19.5% chance Tesla will be at 180 by this Friday. So that's a normal skew that you'll see in put options. However, just switching over to Super Microcomputer, for the same expiry this Friday, look at the IV at the money put options, 104% actually decreases the further down we go. Same deal, switching over ARM holdings. Huge 217% implied volatility at the money, which is implying about an average daily move around 12% in the underlying stock price. And once again, got that negative skew in the put options the further we go out of the money. Same deal with MicroStrategy, got that negative skew. On the other hand, look at the huge positive skew in the call options of ARM holdings. At the money's around 218%, and then stocks move so high, they don't even have enough strikes in the options series yet, only up to 185. An IV on that strike is a huge 273%. Same deal with MicroStrategy, really steep positive skew on the call options here. So basically what that means is the market for these really super hot stocks at the moment is kind of like in a risk reversal mode, having sold out of the money put options, decreasing the IV, and buying out of the money call options, increasing the IV. So the market has just been priced to melt up, and option dealers really trying to cover their backs by asking for really high IVs on the call options. And so like I've been saying, when the market's in this melt up mode, who knows how high and crazy it can get. And so if you're interested in learning more about options and my specific option selling income strategy, then you'll like module 19 of my new online course I've just opened today. First ever course I've ever made. And in it I detail a safe way to sell options, generate monthly income without taking on tail risks. And if you're not into options, that's okay. I've got plenty of other modules for other trading and investing strategies that I use, like hidden bargains, momentum investing, trend following, and my short-term swing trading strategy, which you can use on any asset. And these are just a few of the topics I discuss in my course. It's over 12 and a half hours in total length, 25 modules you can watch on demand, stream to your TV. And it's pretty much an A to Z of everything to do with trading and investing. Whether you're new to the markets or you've been trading for a few years, this is great formal training for you, teaching you everything like how markets really work. I'll take you back through history, looking at all major events in financial markets. I have a few modules on the topic of building personal wealth and how to protect it. And I also dive deep into technical analysis, charting, and fundamentals as well. And so the course is now live, available to purchase on my website, clickcapital.io/course. I'll put the link below this video in the description, and you can go there and learn all about it. You can read the description of all 25 modules. And so when I was making it and deciding on the price, I was initially going to sell it for $1,000 as I truly believe it is worth that. However, I understand that's out of a lot of people's budgets, and I do have many people outside of North America, Europe, and Australia who've expressed interest in wanting to get this course. So I've decided to price it for a much more reasonable $349. That's a one-time fee for lifetime access. However, the good news is since I just launched it, for this week only, I'm offering it on sale for just the one-time fee of $199, saving you $150. All you got to do is enter coupon code SAVE150 when checking out, and you can get immediate access to this course and start watching it right away at your own pace. So if you're interested in learning more about that and wanting to get access, head on over to my site, clickcapital.io, go up to the new course section, and after you've had a read through this page, just enter your email address, click on the blue button, Get Access Now. You'll come to the checkout page. Then you just want to click on Apply Coupon, enter in SAVE150, click Apply, price will be $199, and you can choose to check out with either credit card or PayPal. Then keep the page open, you'll be automatically redirected to create an account, set a new password, and I'm using the professional course management software FreshLearn to host the course. So you'll also get an email confirmation from them with your details. And so I don't hold anything back in this course. I'm sharing all my knowledge and experience from the 20 plus years I've been trading and investing, and from what I learned from my time having worked for a large investment bank. And so if you're not sure if this course is for you, feel free to test it out. I do offer a 7-day money-back guarantee. The only condition is refunds are not given to students who have completed more than 50% of the course, as it's assumed if you're continuing the course after watching half of it that you must be finding value. And that's also to prevent fraudulent refund requests from people who simply send a refund email after completing the course. So you're welcome to watch up to 6 hours of the video course risk-free. And if you don't think it's for you, you don't like the sound of my voice, video editing or whatever it is, just send an email to support@clickcapital.io and we'll send your money back, no worries at all. However, I think many of you will continue on and complete the course because like I said, if you like this show, you're going to love the course. I've saved all my best stuff for this online course I've been working on for over 6 months, and I really pull back the kimono and show you all my investing and trading strategies, specific investments I have, long-term secular trends I'm playing, and how I've positioned my portfolios going forward. So if you want to learn more about that, click the link below this video and head on over to the page and check out this special I'm running for this week only. Okay, so just getting back into the daily show, we've got quite a bit of momentum in the market now. We can see that in this chart here of the spread between long-short momentum factor actually breaking out now. And of course, that's been led, like it has done for a long time, by growth. And on some measures, we've never seen the spread between value and growth stocks this wide. Value peaked out back in 2007 against growth after having a really bad 1990s as well, where value underperformed growth in the tech bubble before finding a sharp bottom. And when tech pulled back really hard, value shot up and outperformed, just as small caps and commodity stocks did in this period as well. However, could that be changing? One of the big drivers of stock price is earnings revisions from analysts. And we got a bit of a fishhook move last month in the value minus growth delta of earnings revisions on value stocks looking forward a year versus growth stocks. Basically means analysts are pulling back their earnings expectations for growth stocks and starting to increase them for value stocks. And I don't know about you guys, but I saw some huge moves up today in value, especially small cap value stocks in my portfolio today. Some small tech stocks I own like CSP, ripping up almost 20% today. And another tech hardware stock I've got, LTech, breaking out in huge volume as well, up 18.5%. And a whole other bunch of other small stocks, just having some huge rips today on volume. Definitely felt like a bit of a rotation today. You can see that in the spread chart of NASDAQ versus Russell 2000. Fallen a healthy 2.1% today. And last time we saw that at the start of December, the spread actually went to fall for another month as well. And so on some measures, tech stocks are more valued than they were in the late 90s, relatively speaking, to bonds and other parts of the market. However, on some other measures like absolute terms, they're not as valued as those crazy late 90s valuations. But some people are still asking the question, is this a dot-com bubble 2.0? And the biggest point people are pointing to, saying that it's not, is that there's a big difference in profitability of these large tech companies today compared to late 1999, when they didn't really have so much earnings. It's more just revenue growth, hype, and optimism of the future, which did create a huge bubble that popped with the NASDAQ falling over 80% the next couple of years. And so just like we've seen with ARM Holdings approaching the same valuation as the legacy leader of Intel, we're seeing other companies as well like NVDA approaching Amazon's market cap. At the same time, Bezos is offloading a decent chunk of shares. So it could be that these mega cap tech companies, which are very profitable, have monopolistic businesses with wide moats, huge network effects, huge installed bases, keep rolling out new products and services. The cloud's been a strong theme for a couple of years. AI is real and here to stay. They may not have like the same sort of crash and popping of the bubble like the late 90s, but rather just move into the more mature stage of a business, like most companies and industries eventually do after they get past that really strong initial kind of growth phase, which can last a while, 10, 20 years. And they have so much cash, they just can't put it to use in starting new businesses, acquiring new businesses. So they just literally send it back to shareholders in the form of dividends. We just saw Meta do that with rumors Alphabet and Amazon likely to follow. So that's just a sign of a maturing business. And it's very rare for dividend paying stocks to keep increasing at average annual clips of 30, 40%. And since they make up a record weighting and concentration in the biggest indices, S&P and NASDAQ, and we just hit 5,000 for the first time on the S&P last week. People are wondering, where do we go next? We're now trading all-time highs up in blue sky, no overhead resistance. It's the most bullish technical sign you could have. Anyone that's long is in the money. Well, we could keep powering higher as long as inflation keeps coming in as expected or better than expected. That's really what the market's hanging its hat on. And we'll get a fresh look at it tomorrow. The Consumer Price Index CPI figures for January due out first thing in the morning, and that just got revised down by economists. Now expecting a 2-handle for the first time in a couple of years. Headline inflation is expected to have grown 2.9% year over year, with the month-over-month increase 0.2% and core inflation expected to dip again down to 3.7%, which we very well could get. Market would be very surprised if it did come in hotter than expected, would cause a sharp sell-off. Rip in yields, really repricing all of markets. And just looking at last month's reading, it's actually the biggest beat we had in a while, coming in at 3.4 over consensus at 3.2. And it's been flatlining for over 6 months now. So if it were to come in at 2.9% as expected tomorrow, that'll reconfirm the downtrend in inflation to the market, breaking down to new lows, and technically and fundamentally speaking, that's really strong tailwinds for the stock market and risk assets And just looking at the price action in the S&P 500, it is 100% expecting inflation to come in below 3% and continue its downtrend. But option dealers are pricing in a little bit of movement for tomorrow. Can see the VIX climbing here a bit, along with volatility risk premium popping up. Still pretty subdued relatively speaking. And there's a look at the 2-year yield going into tomorrow's CPI. Just trading below 4.5%. Similar technical pattern in the 10-year. Just below 4.2. So if inflation does come in at 2.9% tomorrow, there's no reason tech stocks and the like can't keep putting like it's 1999. So make sure you come back to the Click Capital channel tomorrow and I'll dive into that report and how the markets reacted to it. Just moving on to the world's second largest economy, China. Still got peak pessimism out there across media and online. Still getting articles like this. China's market crash could be the last straw for many foreign investors who leave permanently. Also saying President Xi Jinping has his hands full trying to stop foreign investors from fleeing. With him also saying the country needs to respond to its property crisis to trigger a stable market recovery. And that's no doubt true. That's really what's been the pinpoint of their problems these last couple of years, is they overbuilt big time in their country. All that empty capacity with a lot of bond investors left holding the bag, causing a loss of confidence throughout their capital markets. So a lot of people are saying China's cooked, the dead in the water, it's over, forget about it. However, if that really is true, Chinese government aren't able to rescue their capital markets and restore confidence, put a bottom in it, then that's actually not a good thing for large US technology firms, as they still heavily rely on China. And with some people rooting for their downfall, do you really want to push an angry dog into a corner? Might get it to bite back. And one way they could do that is by messing with Taiwan enough to upset America's largest and most successful companies. As a lot of them, Apple, NVDA, rely heavily on Taiwan semiconductor manufacturing company to still get a lot of chips, not to mention manufacturing in China as well, in addition to selling into the Chinese market. All things of which Xi Jinping has a little leverage over, which he may exercise if he continues to see this huge divergence going on between the American and Chinese stock markets. However, I still think it's unlikely they go into Taiwan anytime soon. Still can't rule it out completely. I think he would rather try and resolve the issue peacefully, as complex as it is. But some are now questioning, myself included, has the Chinese sell-off gone too far? We are getting some signs of big hedge fund investors starting to step back in here. After last year, we saw 42% of investors pull capital from China-focused hedge fund managers. That's already down this year to 6%. And there's signs of a contrarian appetite for China hedge funds, as some are starting to bet on a potential recovery and bounce. And technically speaking, we may have already seen the low back on the 22nd of January, as we have had some big volume thrusts up off that level. Pretty good moves up today across Chinese securities. Saw that in their internet ETF as well. KWeb closing above the 50-day VWAP. Got BABA just sitting there at the 50-day. And once again, we get that correlation between China and clean energy assets as well. Like I said, there was some big rotations in the market today. Clean energy ETF up over 4%. Solar stocks ripping above their 50-day VWAP for the first time in a little while. And a nice move up in clean technology stocks as well. Also ripping higher today is what they call digital gold. Bitcoin getting above $50,000 a coin, first time in a couple of years. And who knows, the punters may be right. We might see $100,000 a coin for the first time ever this year. A lot of people banking on that. Last all-time high was $69,000 in late 2021. With some people now banking on seeing some Ethereum trusts come to the market in the form of ETFs as well. Just looking at the daily chart of Ethereum, that hasn't broken out from its highs just reached a month ago, but it does look pretty strong here. And every move higher in crypto must be so painful to watch for this poor guy here, James Howes, who over 10 years ago, his then girlfriend at the time, no surprise, now ex, accidentally took a bag he had put his hard drive in and a bit of a spring clean to the rubbish dump, which contained almost 7,000 Bitcoin on it. At the time was only worth less than $20 a coin or so. Now it's worth over £250 million, which is almost 350 million US dollars. And he's been fighting the local council that whole time to try and get in there and find it. He's now hired a legal team to represent him, and he wants to go in there with professional engineers using AI technology to look through over 200 square meters of space, 15 meters deep of rubbish, looking for his little hard drive. And so all of us here at Click Capital wish him well on his journey and hope he recovers his 7,000 Bitcoin that his ex-girlfriend accidentally threw away. Ouch. Just moving on to oil. Got it holding ground here pretty good. Still waiting for a response from Iran against the West strike back on them to see if they're going to dial it up further. And we've really got OPEC, led by the Saudis, want the price of oil higher as well. They're the third largest producers of oil in the world after the States and Russia. And the most profitable company in the world is the state Saudi-controlled Aramco. And we've just had their energy minister come out and say they're suspending capacity expansion because of the green transition. Going on to say, we postponed this investment simply because we're transitioning. And transitioning means that even our oil company, which used to be an oil company, became a hydrocarbon company. Now it's becoming an energy company. He went on to say energy security in the 70s, 80s and 90s was more dependent on oil. Now you get what happened last year. It was gas. The future problem on energy security, it will not be oil. It will be renewables and the materials and the mines. This is coming straight from the horse's mouth of one of the biggest sellers of oil in the world, admitting that the future is going to be renewables. And in my opinion, that's part of the reason why they IPO'd their company Aramco. They're trying to offload the risk, basically sell the company to others and get that money diversified out of oil for their own future, because they can see renewables taking them over. And soon as the West can get the price of clean energy below crude, well, we don't need to buy off them anymore. And they know that. Just moving on, look at it, Fed Fund Futures, and there we go again, increasing the chances the Fed's going to stay on hold in May. It's kind of a little strange dynamic in the market. Economists are expecting CPI to come in lower now, 2.9%. However, we've got the Fed Fund Futures saying maybe the Fed isn't going to start cutting rates so soon. And looking at bond yields as well, maybe they're saying this hot economic data could be too much of a good thing and laying the ground for a potentially surprise uptick in CPI in the near future. But for now, the stock market's not worried at all. Still sitting pretty in the extreme greed zone at 78. No love from corporate insiders though. They're still offloading stock, much higher ratio than they are buying it. And just jumping back into the charts, got high yield bonds kind of just consolidating here, just below the 50-day, bit of a big bearish divergence. The dollar index holding strong above 104. Continuing to consolidate is gold futures. Another nice breakout in Japanese stocks. So we've got regional banks holding ground there. Nice move up in micro caps today, up almost 3% on volume. Part of that rotation I was talking about today in smaller stocks. Planetaire still holding up there. And look as I scroll through the meme stocks, the moves we're getting out of there today. Like I said, animal spirits coming back to the market here. With also some nice moves up in the old economy value stocks as well. And an uptick in financials. Market's not too worried about commercial real estate right here. And that's a wrap for today, guys. Make sure you come back to the Click Capital channel tomorrow, where I'll dive into the CPI report, the latest look at inflation, the market's reaction, and how all these hot stocks are trading. Going into OPEX this Friday, could be an interesting week, which could produce some big moves more to come. Thanks very much for tuning into the show. And if you're interested in learning more about my course, and taking a risk-free chance to watch up to half of it, then head on over to my website, clickcapital.io/course, and take advantage of this special offer for this week only. Just a one-time fee of $199. Gets you lifetime access to my course, which I plan on updating for many more years to come. Thanks very much, and see you again tomorrow night. Cheers.